Good afternoon, everyone, and welcome to today's Quick Hits webcast. Today, we welcome two of our CRI partners from Florida, Alan Jowers and Heather Jordan, to give us a refresher on the Paycheck Protection Program and the loan forgiveness alongside that. Before we get started, just a couple of reminders for you. You can submit your questions to Alan and Heather in the sidebar, and they will be addressed at the end. If we aren't able to answer your specific question, we encourage you to reach out to your local CRI office. We will be focusing on answering questions pertaining to the audience as a whole and are more general. But if you have specific questions for your specific need, reach out to your local advisor to get more help for that. Continuing professional education, CPE, is not offered for our Quick Hits webcast series. And excuse me, lastly, you can get a copy of today's slides in PDF format in the handouts section of GoToWebinar. Also, we will be sending a recording one day following the webcast. So without further ado, I will hand it over to Alan.
All right, thank you very much, Mary Allison, and welcome to everybody from sunny Destin, Florida. I'm glad to have you guys with us today for our little kind of refresher and just a little bit of information on the on PPP forgiveness. Wanted to start out with a kind of a 10,000-foot view of the program in general and recap through the timeline of the process. And so the last information that we have in terms of dollars and numbers of loans is as of August 8th. That was the end of the time period where these loans were available. And what you can see is that as of the end of that program, as of August the 8th, there were a total of approximately 5.2 million loans. About $525 billion that had been lent out. And you can see the average calculation there. 5,500 or so financial institutions had participated in the program and had been part of that. And as you can imagine, a handful of those lenders were responsible for a big chunk of the loans, those large lending institutions. And we always make a delineation on the $2 million mark. That's an important distinction in terms of additional audits that are going to come and time frame. And so you can see out of those 5.2 million, only a small fraction of those loans were over the $2 million, mark. I have put a little bit of information just on a statewide basis. I was watching TV and I saw something, I can't remember exactly what it was, but these particular states kept coming up over and over again. And so I thought it would just be interesting to have a little bit of information on that. You can see each state, what the particular loan numbers are and what the particular loan dollar amounts are. As you can imagine, some of the larger states have the larger loan and larger dollar numbers, and some of the smaller ones have the smaller loans and smaller dollars. So just the information is available. It's broken down in a lot of different ways in how they've kept track of the information at the U.S. Treasury. And the last bullet point, when they got to the end of the program, there was about $134 billion of funding that was still available that was not claimed as part of the initial PPP process. So a brief recap of the legislative timeline. So remember, we're about to head into NCAA basketball tournament season. I was watching my beloved Seminoles as they were cruising through the ACC tournament, and that's when the coronavirus hit. And Congress reacted to that. They reacted fairly quickly, and the president signed the CARES Act into law right at the end of March. That created this Paycheck Protection Program. So the first round of funding started on April 3rd. It was fully utilized by April the 26th. There was additional funding that was made available on April 24th. So roughly speaking, about $350 billion the first time, another $300 billion the second time. So a total of about $650 billion of funding. At some point, when we all kind of realized, okay, this is not going to be a 1 month or 2 month journey, that this journey was going to be a much longer journey, the term of the PPP was expanded from 8 weeks to 24 weeks. That's where we are right now. And the Flexibility Act, which came into being on June 5th, changed that, plus some additional aspects, which Heather will go over here in a little bit as we kind of recap some of the key terms of the PPP. And then lastly, the June 30th was the initial deadline to apply for PPP, and on July 3rd, that time frame was extended. So as we saw in the previous slide, you could apply for the Paycheck protection loans all the way through August 8th. So from a legislative timeline, it moved very quickly. As you know, if you can recall, that a lot of things were changing in a very rapid time frame, and between March and August is when the program really took shape. So that's on the legislative side. There was also a lot of stuff that went on from a regulatory standpoint. So the CARES Act laid out some framework, but it was really up to the US Treasury and the SBA itself to kind of flesh out the rules and the regulations relating to the program. What you can see on the slide there is that there have been a total of 29 rules that were issued on various topics. Some of them were more broad in terms, and some of them addressed specific issues. The first one was issued on April the 2nd, 2020, and it coincided with the release of the initial borrower application. So go back, remind, the CARES Act was passed on March 27. A few days later, Treasury had come out with the first rules associated with the program. The most recent guidance, there was a rule that was issued on October 8th, so about a month ago. And then they also have 2 frequently asked question documents that they have been updating as we have gone along. And I believe there's about 40 or 50 different questions that are on that. That was most recently updated as of October the 13th. So a big flurry of activity at the beginning of the COVID period, if you will, starting at middle to end of March, going through April and May. It has slowed down a little bit, but we are still getting pieces of additional information as time goes on. As I mentioned earlier, the borrower application was released on April 2nd, and then they released their original loan forgiveness application on May the 15th. So we've had the legislative timeline, which is kind of setting things up from the CARES Act standpoint. And then we have had the regulations and the regulatory timeline, which has kind of fleshed out the rules as they have been, kind of banted about by Treasury and SBA. So what Heather's going to talk about is to kind of remind everybody, these are all pointers and items that we've covered in some of our past webinars, and we're just going to remind people of some of the key terms relating to the Paycheck Protection Program.
Thank you, Alan, and good afternoon, everybody. So again, I'm going to just go over some refresher of what these permissible costs are that can be used for your forgiveness. So the first item is payroll costs, and those include gross salaries with that cap of $100,000 annualized. So if you got your loan before June 5th and elect to use the 8-week time period, that's going to be around $15,000. If you're using the 24-week time period, then that's going to be around $46,000. You can also include your hourly wages paid to your employees and the cash tips that they received, any contributions to an employee's retirement account that is made by the employer, group health insurance premiums that are paid by the employer, and then some state and local payroll taxes, and those are predominantly going to be your unemployment taxes that are paid to the states. Interest payments on mortgages are items that are the first item of your non-payroll costs, and you can also use rent and lease payments. Those two, when you have related party issues, kind of go hand in hand. If you have one company that owns the building and your operating company rents from that company that you also own, and you have that related party rent, then that rent deduction is going to be limited to the amount of mortgage interest that's owed on the property during the covered period that's attributable to the space being rented by the related party. So the theory is that if the property was held directly by the borrower would only be entitled to obtain forgiveness for the mortgage interest. So if you don't have a mortgage on that related property, then that rent is not going to be allowed to be taken. And the third item is the utility payments. And just a note on all three of those non-payroll costs, those do have to be things that you were already involved in prior to February 15th. So if you've got a lease, it's got to be put in place prior to February 15th to qualify, and same for utilities and mortgages. Some of the key provisions that are part of the Paycheck Protection Program. The covered period with the Flexibility Act that was passed moved from that 8-week time period up to 24 weeks. And that's from the date of the loan disbursement. So the date you get your money, your covered period starts and goes out for either 8 or 24 weeks. If you received your funds before June 5th, you can elect to stay with that 8-week covered period, even though it went up to 24. If you got your money after June 5th, then the 24-week covered period is what you've got to go with. At the beginning, Treasury defined 75% as the amount that had to be spent for payroll costs. But again, with the Flexibility Act, that went down to 60%. So when you calculate your forgivable amount, at least 60% of that forgiveness amount has to have been spent in the payroll costs as opposed to the non-payroll costs. Borrowers do have a safe harbor from reductions related to FTEs as a result of government requirements or guidance. So if your state or health department issued guidance that your particular business had to shut down for a particular amount of time, or had a reduced, could only let a certain number of people in, something like that, then if you had to reduce your full-time equivalent employees, you can have a safe harbor and not have to reduce your forgivable amount for that reduction in FTEs. Unforgiven PPP loans mature over 5 years for loans that were in place after June 5th. It was 2 years for those that were in place prior to that date. And if you got a loan that was prior, you and your lender can mutually extend the maturity of those existing loans that were made prior to June 5th. Payments of principal and interest are deferred out to the date that the SBA remits that loan forgiveness amount back to the lender. So you apply for forgiveness, it goes to the lender that you used, that lender certifies your application and then submits it to the SBA. Then you can wait until after that SBA makes the final determination before any principal and interest would have to start being paid. The latest that can go out is 10 months after the forgiveness covered period. So if you don't apply for forgiveness, then 10 months after that end of your covered period is when those payments are going to start. Your covered period can be shifted to coincide with the first day of the first payroll that happens after the loan funds have been received, but only if you pay your payroll on a weekly or a bi-weekly basis. If you pay any less often than that, then you can't use this, and this was called the alternative payroll covered period. Non-owner cash compensation, as I said earlier, for 24-week period is capped at $46,154, whereas owner compensation is capped at the 2.5 months of 2019 pay, which is what went into our applications for funds. And that's also limited to $100,000. So that calculation is $20,833 for owner compensation. The FTE calculations, your full-time equivalent employees, are based on a 40-hour week. You do have two alternative methods for calculating those part-time people. You can look at everybody who worked 40 hours and more as a 1, and then anybody who worked under 40 hours is a 0.5. So whether they worked 3 hours or 37 hours, they're a 0.5. Or you can say, I'm going to take all my 40-hour and above people as 1, and then I'm going to do a ratio of hours. So if somebody worked 10 hours, then they're a 0.25. If somebody worked 30 hours, then they're a 0.75. You just have to be consistent on your calculations between your comparison period and your covered period. You do have to retain the documentation that you use to fill out your application. Even if it's not the documentation you have to submit, there are some that you have to keep, and you do have to retain that for 6 years after the end of the loan. So if your loan goes out the 5 years, then you're looking at 11 years of having to keep that stuff. Again, owner-related compensation is a little bit tricky. Forgiveness is allowed in certain situations, but not in other situations. Because we get to go out 24 weeks now, that's been diminished some, but just know that owner-related compensation can be tricky. The loan forgiveness application can be filled out anytime during the 24-week covered period. You don't have to wait until you get to the very end of it to fill it out, but you can. But you do have to file within 10 months after the covered period ends, or your payments are going to start having to be made to the lender. And now I think I am going to turn it back over to Alan, and he is going to cover the 3 applications that we have available.
Absolutely. Thanks a lot, Heather. That's good information and a refresher just to put in people's minds. And when we talk about forgiveness now, just to recap what she said, you know, everybody got pushed out to a 24-week period. So whether you were 8 weeks in the beginning or not, everybody has been given 24 weeks. You don't have to wait the entire 24-week period, but you do have 10 months after the end of your covered period. And so the Treasury has provided now 3 different options for forgiveness applications. And it may be easy for you to remember that by my favorite little comedy troupe, Monty Python from the Holy Grail. 3 is the number thou shalt count. So the first one we'll call the OG forgiveness application. It was issued in May, revised in June. It has a total of 5 pages that includes a worksheet and supplemental schedules. And so you can see on here kind of the different sections of the application. You have to put obviously some loan and employee and business information and what your payroll frequency is. There's an area where you list out, here are my payroll costs, here are my mortgage interest costs, etc. You have to go through the process of calculating your FTE and your wage reductions. And then you come up with 3 potential forgiveness amounts. You choose the smallest. There are certifications and signatures that you have to go through. An authorized representative has to make those certifications and sign off on it. There are additional details that you have to include on those forgiveness applications. We talked about Schedule A. There are tables that go along with Schedule A for employees that made $100,000 or less or were not employed at all during 2019. You have another table for those items that are for those employees who made over $100,000. You have to list your non-cash compensation items, healthcare, retirement benefits, those employment taxes that Heather spoke about on her first slide. Owner compensation, which depending on if you're a C Corp or an S Corp or a partnership, you get to deduct certain of those benefits, healthcare benefits, retirement benefits, I believe are for C Corps. I think it's healthcare is allowable for S, but a retirement is not, but I could have those backwards. But it's, so all of this information flows through on this forgiveness application. I believe it's 5 pages worth of information. There's instructions that are about 6 or 7 pages that kind of give you what goes on each one of those. For these, for this particular type of forgiveness application, you're probably going to be using some sort of Excel-based calculator. At CRI, we have one that we use. We'd certainly be willing to help you put your information together, especially if you're going to have more than 3 or 4 employees. It's very cumbersome to kind of put this all down on paper. But that's that first forgiveness application. That's kind of the original one, and it's going to be the one that you're going to use by default unless you fall into one of these other 2 categories, which are easier and more simple. So just like on the income tax form where we have a 1040 and we have a 1040 EZ, so there's a forgiveness application, and then there is the forgiveness application EZ. This one was issued in the middle of June. It's a 3-page application. It is for specific circumstances. If you are a self-employed individual that has no employees, you can use this forgiveness EZ. Or if you are a business that can certify, there's some additional certifications, one of the 2 items below, then what this does essentially is it gets rid of having to report Schedule A and the related worksheet. You still have to go through the calculations, but you don't have to necessarily turn those in as part of your application. There's also, as you can see, there's no calculation of the reductions relating to FTEs, because what you're going to do is you're going to certify that either A, you didn't have any FTE reductions, or you're going to certify that your FTE reductions were as a result of government requirements or government guidance. So the example of that would be if you are a restaurant and you were ordered to close down for a period of time, or you were ordered to only have carry out for a period of time, you would be able to certify that we were unable to operate as normal because the government told us we had to close, or the government told us that we could only do carry out. So there's a lot of circumstances like that where I think businesses will be able to make that case that we were unable to operate as normal. So if you fall into one of those categories, either you didn't reduce your employee number at all, or you did as a result of government, you can do this EZ application. It's still going to take a little bit of time. You still have to go through the calculations for your actual costs, but it's a little bit less in terms of documentation. The last application that came out about a month ago. They're calling this the 3508S, and I'm assuming the S stands for simplified. And this is, again, for specific circumstances. If you have a loan that was $50,000 or less, then you can file for your forgiveness using this 3508S form. It automatically exempts you from any of those reductions relating to FTE cuts or pay rate cuts. But I do want to say it's not an automatic forgiveness. You still are going to have to document how much money you spent on those types of expenses that Heather talked about were permissible. It really does simplify the amount. You don't have to list the individual costs. You're just going to list your one forgiveness amount. You are going to have certifications. You are going to have to sign off on it. You don't have to, but you can provide some of their optional demographic information. There are schedules and exhibits that they're not required, just like we had with the EZ. So remember on the original, there's schedules and exhibits. We don't have to do that for the EZ. We don't have to do that on the simplified method, but you are going to have to submit supporting documentation with that application. So if your loan was $45,000 and the payroll that you're using is for $60,000, well, you're going to get your entire amount forgiven, but you still have to include the documentation for that $60,000 worth of payroll to be sent in with your application. So as you're going through the forgiveness process, you have those three different options: the original application, and then if you qualify for one of the other two, you can utilize one of those more simple, easier forgiveness applications. So just you'll be working with your financial institution on that. If you can be working with CRI on that. We'll help you kind of figure out which one makes sense for you. And the last thing before we kind of open it up for questions is really just kind of looking at maybe seeing what's going to happen in the near future with respect to PPP. And some of this is going to be obviously dependent upon the outcome of last night and the rest of this week in terms of Congress, the makeup of Congress, and then obviously the office of the president. One of the things that has been talked about is a PPP Part 2, where we're looking for maybe a second round of this type of relief, where it might be more targeted to specific industries or specifically targeted to selected areas that have really seen a decline in economic conditions, or certain businesses that can prove a loss of revenue or something along those lines as a direct result of coronavirus. So that is a possibility. Remember back to the very beginning how there was about $135 billion from the first round that had not been claimed or had not been utilized. So there is some funding that's available, and we're looking at potentially having a second round of PPP. Secondly, and we've gotten a lot of questions on this, talking about the deductibility of expenses. The IRS came out with a ruling that says if you have this income forgiven, then any expenses paid with that income would be non-deductible. So essentially, it kind of makes that income taxable, which was really not the intent of Congress. In fact, in the CARES Act, it specifically says this income should not be taxable. But effectively it is, because they've kind of disallowed the deduction of expenses associated with it. So what's going to happen with that? We don't know. There is talk coming out of Washington that needs to be addressed, but that will be information that will be forthcoming. And one of the things that we have, our task force here, you may want to wait on forgiveness until calendar year 21, because that would put that additional income in the 2021 year, and perhaps give Congress some additional time to act on making those non-deductible expenses specifically deductible. Now that's got to be counterbalanced, and you really need to talk with your CPA about it, because if you anticipate higher tax rates in 2021, then perhaps you want to put the income into 2020. So it's kind of a balancing act on that, but just know that that is out there as a potential future item. There is still the third bullet item. There is still talk about automatically forgiving these loans under a certain amount. The number that I've heard is 150,000. I think there is some appetite for that to kind of help from an administrative standpoint, but I know there's also some pushback on that, because by automatically forgiving those loans and not requiring certifications and not requiring signatures and not requiring basic levels of supporting documentation, you might be encouraging and allowing additional fraudulent activity to occur and to occur without being caught. So even if they don't audit or don't examine every single PPP loan, in fact, we know they're not, they're only going to examine everything over 2 million and then likely a sample below 2 million. But even if they don't audit or examine every loan, to allow automatic forgiveness may allow for some additional fraud because of the lack of supporting documentation. So that's kind of what we're looking for going forward. Remember the refresher of the types of expenses you can use in some of those key terms. And then lastly, those 3 different forgiveness options, the 3 different forgiveness applications and which one might apply to you. So one of the things we put in all of our slides is that this is TBD. There's still a lot that's to be determined. We've come a long way. We've got a lot of guidance, but there still is additional action that I think can and will be taken on this program, and perhaps, as we mentioned, additional legislation to create new programs, and we'll just have to wait and see what happens from that standpoint. So with that, I know we have a handful of questions that have come through, and hopefully some of those have been answered by the presentation. But Heather, do we have any questions that you've seen that would be good to kind of talk about?
We do. We have some questions regarding submitting the applications. One person asks about, do I have to submit it with my lender or can I submit it with the government? Others are asking about their lender not yet accepting applications. So I was just going to cover that a little bit to cover a few of those questions. The applications do have to be submitted with the lender that gave you the loan. Those lenders are going to have different processes. Many have set up portals so that you go online. They may have the application online, or you may upload it and fill it out and then upload your documentation to them. Some are not yet accepting applications, or are only accepting applications for loans that are over that $150,000 threshold that they think Congress might put a de minimis bill out for. So you do have to wait until they open up the process to you. But you do file with your lender. We've also had several questions about, can you use the easy application if employees have just resigned? You haven't laid them off because of production going down, but you had employees that resign. You would be able to use that and still do that second certification on the easy application if you have tried to replace them and weren't able to. That's really the certification, is that you lost employees and weren't able to get another employee that was comparable in to replace them. So just because you lost one doesn't mean you're not going to be able to make that certification, but you needed to have gone out and tried to replace them in order to do that.
Heather, also one other point just kind of goes along with it. I know that there were circumstances where it wasn't necessarily somebody who quit or resigned, but during a period of shutdown, if those employees were furloughed and then you were able to open back up and tried to get those employees to come back and they voluntarily said, no, I'm not coming back. That would be another example of the same type of thing that you're talking about, that you can still make that certification as long as, like you said, if they voluntarily resign and you can't find anybody, or if you offered them a position to come back and they did not on their end.
Correct. If they declined your offer, then you're still going to be able to make that second certification. That's right. We had a question about whether to use the easy or the S application. If you qualify for the S, you should use the S, because that's going to require the least calculations to be able to submit it. You still have to gather all your documentation and send the documentation in, but you're not going to have to fill out as much information on the application. So S, if your loan is less than $50,000, is going to be the easier one to do. And then if you can't do that one, then the easy is going to be the next best, next easiest to fill out. And then if you can't do that one, then you have to do the full 3508.
Here's a question on here that I've gotten this type of question before, where it says, okay, since this covered period got extended to 24 weeks, basically my payroll covers the entire amount and then some? Do I even worry about putting utilities or lease or payroll tax, unemployment taxes and those types of things? And I think in our conversations, Heather, we've kind of suggested that yes, that's probably a good thing to do. From a simplified standpoint, if your payroll vastly exceeds your PPP loan, then maybe you don't even have to worry about some of those other non-payroll costs with respect to your application.
Absolutely. The lease documentation that you have to gather and the lease number of monthly bills and things like that, and proof of payments is going to make your life easier. So if you can do it with all payroll, we absolutely suggest you use the payroll and just not even have to look at the non-payroll costs. There's a question about selling the business prior to the end of the year. There was an interim final rule that was put out that specifically covered selling your business. And if you do change ownership of the business, you do have to get prior approval from the SBA before doing so. They are not just going to transfer your loan to a new buyer. You are going to have to get approval for that to happen. So you need to reach out to an SBA person in your area that can help you with that process.
Yeah, anybody who's dealing with the purchase or sale of a business and a PPP loan is involved, you really need to speak with some professional assistants, CPAs or attorneys or somebody, because there are, as Heather said, there's some tricks and some hoops you'll have to jump through associated with that.
There were some questions about the accrued and paid that we've talked about in the past. And so when costs are incurred and paid, when costs are paid at the beginning of your covered period, they do qualify as forgivable costs. And when costs are incurred at the end of your covered period, as long as you pay them in the normal course of business, if your payroll runs through your covered period that ends on a Friday and you always pay the check on Tuesday, or you pay the unemployment by the 15th of the next month, those costs that were incurred and are going to be paid in the normal course of business can also be included in your forgivable amount.
There's a good question on here I see about if you request your forgiveness in 2020, but then because of the length of the process, that doesn't occur until 21, is the forgiveness backdated to when you applied? And that, at least in my mind right now, is one of those to be determined items, because I don't know how the SBA or Treasury is going to, I'm not sure how they're going to document that. I mean, a lot of times when you have loan forgiveness amounts from a financial institution, a 1099 is generated, and then the IRS uses that 1099 to match up against your tax return. So I am not sure if they are going to include that 1099 as of the date that you file for forgiveness, or as of the date that the forgiveness is approved. And I think that's one of those things that we're just going to have to look and to be determined, to the best that I know right now.
Right. I think we'll have to wait on a little guidance in that area, which we hope comes quickly.
Right.
Here's a question about if the forgiven amount is taxable, and the answer to that is not specifically. The CARES Act specifically says that your forgiven amount of your loan is not taxable income, but the IRS says that if you pay expenses with non-taxable income, that those expenses are non-deductible. So in order for ease of calculation, that forgiven amount is going to be a non-deductible expense, which essentially makes it taxable.
Right. You'll have a taxable impact to the extent that you get PPP funds forgiven. At least that's the way it stands right now, and that could change. As you can imagine, if Vice President Biden ends up being the winner of the election, we may end up with new Secretary of Treasury. We may end up with new, other parts of the administration, and who knows how that will, who knows what will transpire based on those changes. But as it stands right now, Heather's 100% right.
And we hope those changes come, and we hope they come sooner rather than later. They're going to make tax season fun.
Right.
There's a question about lease payments. Could these lease payments do they have to be for a building or property, or could it be for copiers and automobiles? And I think that answer is yes. Those lease payments can be on either real or personal property.
Mm-hmm. Well, I think that covers just about all the questions that we have. Certainly, I would hope that if you have any additional questions, or if you have some specific questions relating to your particular circumstance, CRI, we have offices across 10 different states from North Carolina to New Mexico. Would certainly encourage you to reach out to the office that's closest to you. Within each office, we have identified a PPP champion, somebody who has been involved in the process since the very beginning, and they would be knowledgeable, and they would be the person that you can start with, and look to for any sorts of assistance or guidance on preparing your forgiveness application and kind of going through that process. So again, I hope this was informational and helpful to you. And if you need anything else, please reach out to your local CRI office. And with that, I think turn it back over to Mary Allison to kind of close us out.
All right. Thanks so much, Alan and Heather, for this presentation. And thank you to each of you today for logging on with us to hear more about PPP forgiveness. As a reminder, you will receive a link to the recording within the next 24 hours. If you don't, you can find the recording on the CRI website and the COVID-19 resources. Thank you again so much, and have a great rest of your day.